Hello guys, this is Gaurav, your mentor, your analyst, and your advisor at Finance Visory. Today is your third class, and today also we're going to talk about some basic things which you must know before entering into the market. Today I'm going to discuss about this beautiful thing that's called candlestick. And until and unless you are thorough with this topic, you cannot become a technical analyst. Okay, this is the most important thing in technical analysis. Every candle that forms in the market, every candle that forms in a particular chart represents something. And if you are able to understand why it is forming, then yeah, you have just mastered technical analysis. Okay. So these are Japanese candlesticks because they were invented in Japan. A candlestick is a type of price chart used in technical analysis that displays the high, low, open, and close, high, low, open, and close of a particular candle at a particular point of time. The time frame may be 1 minute to 1 month. It will show you every candlestick. Every candlestick will represent you some time frame, and yeah, for every time frame there is a candlestick present. The green candle on the left hand side, that is this one, is a bullish candle. Why I am calling it a bullish candle now? Now, what is a bullish candle? A bullish candle is the candle that opens low. I mean, the closing of that candle is higher than its opening. Just see, it opened out here, traveled to this place. So this is marked at its low, and then traveled to this high. So this is its high, and then came to close at this point. If it had closed at this point, suppose, then also this is a bullish candle for me because its closing is higher than its opening. But if it had closed at this point, then it would have become a bearish candle because its closing is below its opening, just like here. Same candlestick, same high and low, just the open and close are different. Okay, don't do it guys on the screen, okay, because you know. So the closing, when a candle's closing price is lower than its opening price, okay, then it is called a bearish candle and it is denoted by color red, while a bullish candle is denoted by color green. Okay, this is called wick. This is called wick. This as well, these are called wicks. And yeah, wicks, so you can call it wicks, you can call it shadows, you can call it tail, whatever, but I call it wicks. Oh. So why do wicks form? There is a question arising that why do wicks form? Why don't we consider this whole as a body? Till this point, why don't we consider this as a whole body? No, because wicks signify rejection. There is some force at this point which is trying to push the price downwards, and this is why this wick has formed. Okay, wicks signify rejections, and the big reason, this is the big reason why wicks are important to find out support and resistance levels as well as target and stop losses. Okay, I hope this is clear. I hope you are clear with this point. Am I clear, guys? Okay, fine. Now there is one more psychology that I follow, and that is called bigger the body, stronger the candle. This is the body of the candle. Okay, um, this is the body of the candle. This whole thing, this is the body of the candle. So bigger the body, stronger the candle, and smaller the body, weaker the candle. That this is the psychology that I'll advise you to follow always. Now, next up, there is some notes on candlesticks. Japanese candlesticks are formed using open, high, low, and close of the chosen time period. Japanese candlesticks can be used for any time frame, whether it is 1 day, 1 hour, 30 minutes, or whether whatever you want. They are used to describe the price action during the given time frame. If the close is above the open, then a hollow candlestick, usually displayed as green, is drawn, and vice versa. The hollow or filled section of the candlestick is called the real body or body. The thin line poking above and below the body displays the high-low range and are called shadows or wicks or tails. The top of the upper shadow is the high and bottom of the lower shadow is low. That's it. Next up, I have forms of candlestick, and now I'll move to whiteboard for this. Okay, just hold on. Okay, so I said you about two kind of candles. Okay, one is a bullish one. One is a bullish one and other is a bearish one. A bullish one is somewhat like this: open, open, high, low. Sorry, this is close and this is low. Okay. This is a bullish candle. This is body and this is wick. And a bearish candle is denoted by red color. High and low remain the same, but open and close only are the things that differ. It is having a red body and this is having a green body. Okay. Now there is a third type of candlestick. These are two types of candlestick, but there are actually three type of candlesticks. First one is bullish, second one is bearish, and the third one is a doji. In bullish, low is not low, close is above open, and here close is below open, and here close and open are at same level. Okay, a doji somewhat looks like this. That's it. A doji doesn't have a body. Suppose a candle opened at this point. Okay, suppose the candle opened at this point, moved till this point, came down till this point, and again came to close at this point. So this has become a doji for me. A doji has either no body, or a very small body, something that you can ignore. The body should not be that much big enough. It should be that much big that you can actually ignore. Okay, so a bullish candle signifies a uptrend, a bearish candle signifies a downtrend, and the doji signifies indecision. I said you wicks signify indecision. There is some force at this point which is forcing it downwards, and again some force at this point which is forcing it upwards. That is why the long wicks have formed and there is no body present out there. Okay, this is why dojis help us to find out good support and resistance levels, or good target and stop loss levels in intraday. There are three kind of dojis. Here, the high, low are same, just as in this point means the other candles, and the open and close are together. The open and close are together. This is called a long legged doji. Next up, we have a dragonfly doji. This is called a dragonfly doji. Here, the open, close, and high are together, and the low is different. This is called a dragonfly doji. Why do we call it dragonfly doji? I don't know. Must be because when you see dragonfly sticking on the walls, its feathers are stretched somewhat like this only. So I hope this is the big reason it is called the dragonfly doji. And third one is we have a gravestone doji. Here, the open, close, and low are together, and high is different. The name is because I think in burial grounds you must have seen the epitaphs like this. This is the big reason I can find out that it is called gravestone doji. Okay, so dragonfly doji is still a bullish kind of figure that I will say, and gravestone doji is still a bearish kind of figure. Reason because the price opened at this point and the sellers try to push it downwards, but the buyers are not letting it go. Okay, so therefore the candle stopped at this point just before its high and formed a dragonfly doji. While a gravestone doji, just think that a candle has opened at this point, went high to this point, and there were so many sellers that they took the candle to this point. Okay, so it has formed a gravestone doji, and you can also call it gravestone doji signifies death. You can also call it. Okay, so means the price may come down after forming a gravestone doji. On the other note, on the another note, grave means dojis. All the three dojis signify indecision. Indecision between buyers and sellers. There is a huge war between buyers and sellers, and the market is not able to decide where to go. And this is why dojis are formed. Is this part clear, guys? I need more replies before moving ahead. Is this part crystal clear to everyone? Okay, fine. Fine. Then now let's move towards another topic that is called support and resistance. That's called support and resistance. Can you explain again? I was connected for 5 minutes. Okay, sure. I'll explain it once again. Don't worry. So there are three forms of candlesticks. One is bullish, second one is bearish, and third one is a doji. A bullish signifies a uptrend, a bearish signifies a downtrend, while a doji signifies indecision. Okay, the open and close are together. Here the closing is above its opening, and here the closing is below its opening. Okay, there are three kind of dojis now. Okay. This is called a long-legged doji. Okay. The open, close, high and low, I'm marking out here. The open and close are at same levels. How? Suppose a stock means a candle opened at this point, went high to this point, down to this point, and again came to close at this level. Okay. So the opening and closing are same and the high and low are different. So it has formed a long leg doji. What does a doji signify? Now, what does the long leg doji signify? That there is some fierce battle between buyers and sellers. Sellers are pushing the price downwards while buyers are pushing the price upwards. So market is not able to decide where to go. It is forming indecision. So mostly you will see dojis at reversals. Mostly. This is a long leg doji. Next up is a dragonfly doji. Okay. In dragonfly doji, the opening, closing, and high are the same, whereas the low is just this. Okay. Suppose the candle opened at this point, made a low of this point. Means just as the candle opened, there were a huge number of sellers and they tried to push it downwards. But what happened? Buyers again rallied upwards and tried to close in front of its high. So open, close, and high are same. Yes, reversal of the market movement, reversal of the stock movement, whatever you can call it, until and unless there is some huge positive or negative data according to that situation is developed. Here the sellers try to push the market downward, but the buyers again push the market upwards. So what happened is the buyers are still dominating out here, though it has formed a doji, but the buyers are still dominating out here. So I will call it somewhat a bullish. Okay, somewhat I will call it a bullish doji, though there is a fierce battle between buyers and sellers. Next up is our gravestone doji. Okay. In a gravestone doji, the high is different and open, low, and close. Open, low, and close are the same. Suppose a stock opened at this point, suppose at this point, and there were a good number of buyers and pushed it upwards. Once it went upwards, they dumped it. They dumped the stock, and now it has come down out to this point. So you can call it, you can signify that a gravestone doji is somewhat a bearish doji, because there are no buyers in it. Sir, should we consider doji strategy at a lower or higher lower time frame as yeah, you can consider it. Of course you can consider, because long wick rejections, long wick rejections always help you to find out good support and resistance levels, as well as good uh, target and stop loss levels. I will get back to you later on this topic. Don't worry. Why I said you always find long wick rejections. So this is somewhat a bearish doji, just because the sellers are dominating out here. And you can also metaphorically just signify it, just calling it like a gravestone doji signifies death, and while a dragonfly doji is ready to fly. Okay, a dragonfly doji is ready to fly. That's, you can metaphorically signify it. Next up, I'll move towards the next topic, and that is support and resistance. So I think the synonym of these words are quite clear. This is somewhat what we can call it, support. Resistance is, I know it is obstacle, and support is just tell me a synonym of it. Till then I'll plot you a graph. So support is somewhat acting as like a helper for you. Suppose support and resistance can be drawn in horizontal as well as diagonal lines. Okay, these are called trend lines. This is a trend lines. And support and resistance are never a particular point. You can never say that a particular stock is having a support at 400 4000 rupees. Okay, you will never say that a particular stock is having support at 4,000 rupees. You will obviously say a zone, say like 3980 to 4020 is a very good support for that particular stock. That's what you can say. You will never say that 4,000 is a support, and if the stock goes like 3999, support is broken, now I'm going to short the stock. No, it never happens. This is something that you should never follow. The support and resistance are zones. This is a zone, and how this zone works is what I'm going to tell you now. Suppose support is also called demand zone, and so resistance is also called a supply zone. Right? Suppose a stock is moving like this. So what can you figure out of this diagram, whatever I have drawn here? This is a demand zone. Okay, this point is a good demand zone. So people try to enter a rally from this point. They went up to this point, and at this point, that is the supply zone, they dumped whatever they had purchased. So the stock again came back to this level. Again, the sellers or the short sellers who had shorted at this point, now they will again book their profits at this point, and the market will try to move upwards now. So this is how the support and resistance story goes. If a support is, say it is broken, if this support is broken like this, so now this support has become a new resistance for this stock, and the stock will now behave like this until and unless it finds a next support on chart. And if the resistance is broken out here like this, so this earlier resistance zone will now act as a support zone for the stock, and it will move upwards until and unless it finds another support. This is how support and resistance zone works. You can also find support and resistance in trend lines. Okay, sometimes market doesn't respect our horizontal zones, and market respects our trend lines. So what you can do is find long wick rejections first. I said you find long wick rejections, and don't miss any wicks. Don't miss any wicks for drawing trend lines. Never. I'm plotting here a line chart. When I will move to candlesticks, I will tell you how to draw good trend lines. So suppose this stock is moving like this. This is how a horizontal support is going to behave. I mean, it's not a horizontal, a diagonal support trend line is going, support and resistance trend line going to behave. This is diagonally a zone drawn. Okay. People entering here, dumped at this point again. These are the key levels. And if these are broken, then yes, this will act as my next key level because this is my horizontal support line out here. Got it? Any doubts in this topic? Should I move forward? Okay, fine. Yeah, so I found out an antonym, and it is calling a, it is saying that back up. So you can call it in Hindi, you will call it what we will call it in Hindi? Sahyog, an obstacle as badha. That's it. Moving forward to our next topic, and now we will discuss about type of candlestick patterns. Okay, this is type of candlestick pattern. I'm going to tell you some of the basic patterns that you will always see on charts, and you can always trade on them, keeping a good risk to reward ratio. Okay, so our first pattern is called uh, ascending triangle. Okay, our first pattern is called ascending triangle. So how does an ascending triangle looks like? Ascending triangle looks somewhat like this. First, let me clear two key points. There are two terms called static and dynamic. Okay. So static means fixed, and dynamic means changing or not fixed. Okay. So ascending triangle looks somewhat like this. Rise, will behave somewhat like this in ascending triangle. It will always give a upside breakout. The reason, what's the reason now? Suppose this level is 60. 60 is a resistance level for a particular stock. Okay. And the stock is coming down from 50 rupees. This is 50 rupees. So what you can see is whenever the stock is hitting its resistance level and trying to come back to its initial support level, people are buying on dip. This is called buy on dips. Okay. Suppose this is 52. Again, the stock hits its resistance level and tried to come to its initial support level, but people bought on dip. It is 54. Same happened, and same with 56 and 58 and upside breakout. Why a upside breakout now? Why a upside breakout now? The big reason is at every dip, new buyers are entering. So buyers are trying to overpower the sellers. Buyers here are trying to overpower the sellers. And this is why a upside breakout in 99% of the cases, you will always see a upside breakout in a ascending triangle. Resistance getting weak. Yeah, just because people are buying on dips. This scenario is called buying on dips. Every dip is being bought. Clear? An ascending triangle is having a static resistance and dynamic support. See, the resistance is fixed and the support keeps changing. Minimum point to draw trend. There is no minimum point to draw trend. Okay. I am just giving you example. If I wipe off this 50, 52, 54, 50, 58, then also it will be showing a trend line on it. It doesn't mean that you need a minimum point to draw. Yeah, if you want to draw a trend line, just make sure that it is actually getting minimum 2 touches of the swing. Yeah, minimum 2 touch points. Exactly. Minimum 2 touches and maximum as many touches as you can. And one more thing is that the more the touches on the support or resistance level, the weaker the support and resistance starts to become. There is one more thing. Okay. Is ascending triangle clear? Okay, fine. Then we will move to our next pattern, and that is called a descending triangle. So how does a descending triangle look like? First, let me tell you, a descending triangle is having a static support and dynamic resistance. Okay, this is buy on dips, and this is sell on rise. What is sell on rise now? Can you repeat last line? What was my last line? I don't remember. Okay, so I was telling that in ascending triangle, there are more buyers, and the buyers are gonna overpower the sellers just because they are buying on dips. Every dip is being bought, and what is happening is the means more the touches on the resistance or support, the weaker it starts to become. That's what I said, I guess. So a descending triangle scenario is a sell on rise scenario. How? Suppose this is my support zone. Okay. And a descending triangle will look somewhat like this. Okay. This is going to be a scenario, the scenario in a descending triangle. Now, suppose this is 60 rupees, the support level, and the price started falling from 70 out here. From 70, when it hit its support region and tried to come back to its original resistance point, people sold on a rise at 67. People sold on rise on 67. Again came back to 60. Again people sold at 64. Again came back to 60. Now people entered at 61. And then a downside breakout. This is called a sell on a rise scenario. Every rise is being sold and fresh sellers are entering at every rise. New sellers are entering at every rise. This is called a sell on rise scenario. And 99% of the times in a descending triangle, you will see a downside breakout. Clear? Okay, fine. Next up, we have Pinant. There are two kind of Pinants, bullish and bearish. In Pinant, the support and resistance both are dynamic, and it looks somewhat like this. A bullish Pinant has a big green pole, while a bearish Pinant has a big red pole. Okay. Price came from this region and it will give upside breakout. While in a bearish Pinant, price will come from the upside, will consolidate and will give a downside breakout. It will work according to the trend. If the trend is bullish, it will form a bullish Pinant and upside breakout. And if the trend is bearish, it will form a bearish Pinant and the breakout will be on the downside. Fine. Fine with the explanation, guys? Okay, then this link is expiring within 30 seconds. So I'm going to share you one more link. Just join in from there.